In this video, I'm going to teach about liquidity zones, liquidity levels in the markets, how to identify them, and how to place in trades after the liquidity sweep. When you check into the last videos, I showed you on how to get the different demand zones, supply zones, support and resistance levels, right? It is the same factor that we're going to use to find all those zones that I've talked about. Have you ever noticed that markets make out stop hunts? Like they try to hit your stop loss before they go in the same direction. I think you've noticed that thing before. So that's what I call liquidity. You get? So I'm going to find you those zones. I'm going to show you the advantage of and disadvantage of placing those trades either before liquidity sweep or after those guys sweeping the liquidity, or the big boys sweeping the liquidity. So when you look at this pair, this is gold, right? And it has different candlesticks. It has different structures that it has printed out. It has everything, right? So here, when the chart is just bare like this, you really have to know how to get the liquidity zones in the market, right? So this is how the thing moves. First of all, you have to look for the demand and supply zones in the market, right? Like for example, we're going to look for some zones here. And I'm going to show you reasons why people can make a lot of money through these levels here. So when you look at here, that's the demand zone. You have to look for a supply zone also. This one, if you never learned how to do it, you have to check in my last videos. How the thing moved, right? So guys, previously we caught this buy here. Let me show you the buy that we caught. And I'm going to give you reasons why we caught that buy from here. I gave it in my channel. And if you're not in my Telegram channel, guys, my WhatsApp groups, you should check the links in the bio so that you don't miss out, right? So now I'm going to show you reasons why we bought what? Why we bought gold from this level up to this level here. And these were over 444 pips. I think you can see 450 pips. Yeah, so lot one is giving you like $4,500, right? So now I'm going to show you reasons why this buy was so valid and why we took it. That's one, depending on the different circumstances that were in the market that day. When you look at it here, this was a strong demand zone, right? Or a support, right? So if it was strong, it means I do have to wait for a liquidity grab in the market. How? When you look at it here, as I told you in the last videos how to get these zones, I'm going to show you these touches here. So how do we get these zones? You can see that break here, right? Then the retest, you see. The market went up to those levels up there, then it came back up to this level here, right? So this level was resisted so much, which means it was strong. When this level is strong, it means if market hits that level another time, it won't just buy like that. It will have to sweep the liquidity below those levels. Why? To pick up the orders. Like for example, whenever market reaches this zone here, I'm going to show you the liquidity levels that we're talking about. So whenever market reaches this zone here, this is our zone, right? And it is the zone that we are buying from, making some small amounts of money, right? So market came back another time in this zone. Do you think market will just buy like that? These guys are always wise. They tend to take away the stop losses of people, and maybe even to trigger the orders of the what? Of the big men. Because whenever market reaches this level, some people be having their buy limits here. If at all they want to buy, they be having their buy limits here, and then there are people who always put their sell stop losses below the demand zones or below the entry zones, because someone can make this as the entry, right? But then if you try to enter through this candle, it means you might have not waited for the liquidity sweep, and then they can even literally just sweep you out, and then market just goes your way afterwards. And also they are trapping those people, they are trapping sellers. So people can think that maybe this zone has been broken, then they just tend to sell, right? And when you do that, these guys are always wise that they will always take you out no matter the case. So what do I do? What do I wait for? Whenever market reaches this level, two factors will work out. One, discipline. Two, patience. So they might sound different, but they can act the same way. How? If at all you're not disciplined, it means you can't be patient to wait for the market to reach into your zone. And if you can't wait for the market to reach into your zone, it means, by all means, if you have small capital, you will be just stopped out. Then market will just move will just move its ways. So when you look here, market came up to this level. So there were other buyers who bought. So the other buyers who bought are always trapped and they are put out immediately. Whenever this market strikes down, to sweep the liquidity down here, that's why we talked of the liquidity sweep here. To sweep the liquidity down here, people are stopped out. So you should do really watch out. So when you look at, when market reaches this level here, guys, I cannot just buy. For example, I always tell people, even if you know price action 100%, there is no guarantee, because for us we are traders, right? So there is no guarantee that you're correct. What do you need? I always talk about conferences. There are conferences that we use. The free conference I'll give you will be about the candlesticks. Everyone can learn candlesticks. When you look at these candlesticks here, you can know that maybe this candlestick means this and this. When I do this, this will happen. This is what I expect, right? Everyone, you have to try and know what candlesticks are. When you look at this thing very well, you will see that whenever market reaches this zone that I've told you, if at all you're going to buy from this zone, please endeavor to wait for market to first sweep below these levels here. The levels that market bought from earlier. It has to sweep these levels in order for you to feel comfortable to enter in any way, because whenever market reaches this level here, it will act like it's buying. Then it will beat up the early buyers. So you have to wait for it to sweep this low here. That's why they call the lower lows, right? So you wait for it to sweep this low here and then this low here. Also, when they sweep these levels here, as long as they sweep below like this, it means this market will buy. How do you get the confirmations? There are many confirmations there are two concepts that I normally don't just share, but they're the ones I use. Another free one is the candlestick formation. How are the candlesticks formed? When you look here, you just see that when market reaches this level, mostly people have this question. So at which time frame do you trade from? I trade in every time frame, but every time frame has its own news. So when I go to 15 minutes, can you see that here, this zone here, I'm having what we call multiple rejections here. So are you seeing these multiple rejections here? What do they mean? And what does it mean? It means that sellers are losing momentum. If at all it is putting out these multiple rejections. So what do I always wait for? I always wait for that spike candle, that passes through to sweep out the stop orders that you have been talking about down there. After waiting for it, I will wait for the 1 hour candle. Now this one's the easiest strategy that everyone can use. I will wait for the 1 hour candle to come and close above the entry price that I have. Which entry price? Above this demand zone. So when it closes above the demand zone, it means market will buy. It would have given you good confirmations. Now, with my 2 conferences that I use, or 3 conferences that I use, I'll just go in full margin.